Hi, I'm Erin Tully. I work in compliance with carbon markets at S&P Global. Today we're here at the New York market briefing where I spoke about clean fuel standards. So some of the major takeaways that we've seen about the clean fuel standards is it's a policy that's really spreading throughout North America. It's now in California, Oregon, and Washington, and policy has been passed in New Mexico and is likely to start in 2026. We're also seeing this program in Canada federally as well as in BC. The way these programs work is essentially they incentivize lower carbon intensity fuel in the transportation fuel pool. So higher carbon intensity fuels generate deficits, lower carbon intensity fuels generate credits, and the fuels that generate deficits have to buy enough credits to cover their deficits. So we do see some credit buildup in some of these markets, and when there's an increased supply of these credits, we generally see the price falling, and when there's lower supply of credits, we generally see the price rising. Prices are also very dependent on regulations. We saw the Canadian price rise following the federal election of Mark Carney earlier this year. As policy uncertainty decreased, we saw a lot more people trading in the market and prices really rising. Alternatively, in Washington, where there's already a lot of low carbon intensity fuel and a lot of hydropower, we're seeing a larger credit bank buildup and seeing those prices stay relatively low. We've also seen some policy changes in the California market. We saw them tighten their carbon intensity targets this year amid a big credit bank build. And we also saw them restricting some canola and soybean feedstocks for biomass-based diesel, and doing some long-term restrictions of avoided methane crediting and biomethane. So those are some of the major changes we've seen in clean fuel standards in North America this year. If you're interested in learning more, you can follow me on CI Live Community.